Hi, I'm Jen Rubin, editor-in-chief of The Contrarian. Delighted to welcome back Jared Bernstein, a familiar face to many of you and a frequent contributor to The Contrarian. Jared, welcome.
Thanks so much, and thanks for doing what you're doing over there. It's a pleasure to contribute.
Absolutely. We're glad to have you. Jared, I was a little bit surprised. I thought it was going to take longer for Trump to screw up the economy. After all, you handed him an economy that was generating more than 200,000 jobs a month. You had increased real wage earnings, narrowed the gap between Black and white Americans. You had a robust revival of manufacturing. What happened? What did he do?
Well, you right off the bat, you raise a very important, if somewhat under the hood kind of point that we have to get into if we're going to have this discussion. And that's the difference between soft data and hard data. There is no question, and I completely agree with your sentiment about how quickly it's turned, that the soft data, meaning surveys of businesses, of consumers, meaning how people feel in terms of their pessimism about the economy, which is just on a cliff dive, that just shifted from pretty ebullient, pretty positive to sharply negative. But underlying your question is an important fact, which this is an almost $30 trillion economy, and it takes a lot to turn it around. You know, the old ocean liner adage is applicable here. And the hard data, the jobs, the GDP, the consumer spending, now they kind of lag. They come in a little bit after the soft data. They're still holding up pretty well. And in fact, it's interesting. You mentioned 200,000 jobs a month. The pace of job gains, at least through February, was still 200K per month. But again, it's my contention that because of how sharp the fall off in the soft data has been, that it will show up in the hard data at some point.
Why is there this sharp decline? What is Trump doing or not doing that has spooked the markets, has spooked consumers, and that has caught your attention?
Well, let me first say just a couple of words about the what and then get to the why. So the what is that we just saw a 29-month low in consumer sentiment. We saw an off the charts increase in inflation expectations. That's what people expect inflation to be in coming months and years. That's important for the Federal Reserve. It tends to spook them a bit, might mean they lower rates more slowly. And we've seen this deterioration of consumer sentiment for businesses, for small businesses. Plans to expand have sharply declined for people at high incomes, for people at low incomes. And this one is really pretty remarkable. A lot of these sentiment measures have become very partisan, as I'm sure you know. We're starting to see Republicans also go negative. Why? It is very much a function of the lurching on policy from the new administration, particularly around tariffs. And I think probably the Doge is in there as well. Every time people talk about the economy, whether they're stock market investors, businesses, or just folks meeting up on the street, either the word or the sentiment uncertainty comes out all the time. And if you look at measures of policy uncertainty or trade uncertainty, where we try to quantify the extent of that, it's through the roof. And nobody likes that one bit. Humans are risk averse, investors are risk averse, they'll sit on their hands, consumers will step out and sort of wait till things calm down. So it's all this lurching around the tariffs, along with the fact that people, and polls are quite clear on this, people know that tariffs are going to raise their prices and they don't like it.
So, if you're a major manufacturer and you have to make decisions about what cars you're going to sell in the next 6 months or what parts you're going to import, simply because the tariffs are suspended for 30 days doesn't make your job any easier, does it? In other words, when you're planning ahead, as these folks must, it really is the uncertainty as much as the implementation of the tariffs that you have to be concerned about.
Yeah, that's precisely right. And I would say it's not that it doesn't make your job easier, that it demonstrably makes it harder. And I say demonstrably because these businesses are telling us, again, we've got these surveys, they're saying jump one way or the other and land there. We don't want to see tariffs of the type that you're suggesting. This is the businesses themselves, but either put them on or take them off. And this is interesting too, because when Trump talked about 25% tariffs on Canada and Mexico, it was explicitly to help domestic car producers, Stellantis, GM, Ford. All three of them got on the phone to the White House and said, don't do this. Alcoa, I cite this example a lot. Alcoa is the largest aluminum producer in this country. They consistently are going to the White House and the US trade rep and saying, please give us an exemption on these tariffs. We don't want them. So even the businesses that are supposed to be protected are against this. Why? Because 45% of our imports are inputs. They're called intermediate inputs. They're inputs into our own manufacturing. So when you put those kinds of tariffs on goods coming in from other countries that domestic producers use here to build the things they're building, that makes their work more expensive. And so this is really hurting businesses, but it's the threat of the tariffs and it's the uncertainty.
In the first Trump term, he was the one who renegotiated NAFTA, which accelerated the integration of Canada, Mexico, and the United States. Was that overall a good thing for the economy? And what happens when you break that integration apart and you begin seeing these trade barriers and less merchandise, commodities, people going back and forth?
Yeah, that was a good thing. The USMCA, United States Mexican Canada Trade Agreement, was a good trade agreement actually. And it's funny at the time I wrote a column for a magazine a newspaper you're familiar with called the Washington Post, um, considerably praising that trade deal, and for a number of reasons. One of which is that it, as you suggested, did create this integration. And so now we have this North American production system that actually works quite well. But the thing that people like me always worried about was, okay, this is just, another way to exploit low-wage workers in other countries like Mexico. And what the USMCA had in there was some provisions, I would have liked them to be a bit more muscular, but at least they were there, provisions to actually protect union power in Mexico. And there have been a number of measures taken under USMCA when Mexican employers have violated union rights down there. So both in terms of helping to add a little bit more bargaining clout to poor workers in other countries, but also this integrated production system, which actually is a very positive thing and works well. Yeah, that was USMCA. So to see Trump breaking one of the few things that they did that I thought was positive is disheartening.
We now see the EU talking about not buying military equipment from the United States, for example. You've seen China retaliating. Talk to us a little bit about outside North America. What is this doing in the global economy? What effect are the Trump policies having, not only for us, but for our trading partners?
Really interesting impacts. One of the things we're seeing is, for example, China, which has for a long time and continues to have this very mercantilist approach to trade, by which I mean flooding the world with cheap exports. And that can be truly problematic. When I was in the Biden administration, we tried to take action against that because that kind of unfair trade is a negative for our production. China's kind of looking around the world and starting to see, boy, this protection is getting pretty stark. These barriers look pretty high. They're starting to a bit more internal investment and trying to boost internal consumption. As a friend of mine emailed me yesterday, we're forcing them to become a bit more Keynesian to actually support more domestic consumption, which is important. And then yes, I think other countries are clear. Look, you'd have to be, I don't know what I was thinking the word deaf, but it's deaf in the nose not to be able to smell what's going on here, right? Which is we're becoming much more Fortress USA. America first means America, by itself. And that will definitely lead to other countries decoupling, from us if it continues. We've seen that already in countries with some of the retaliation on the tariffs, which have been quite sharp and quite quick, completely expectedly. Anyone who didn't see that coming has been paying attention. But we're also seeing, I think, a kind of a sentiment evolve where, it's not just booing Americans at the Canadian hockey game, it's actually taking stuff off the shelves.
So if China develops its own industrial base, or Canada decides it's just as cheap now to trade with Japan as it is with America, do those trade agreements, do those investments simply go away if we suddenly decide, okay, tariffs are a bad idea? Or have we sent them down a road that they may not come back from when we get some kind of sane trade policy?
There are no roads that anyone's gone down that they can't come back from. I mean, China, its export model is so deeply and decades long developed that the kind of tweaking I was just described is really minor relative to the scope of their historical role in global trade. So they'll continue to have an export driven model. I'm seeing marginal changes at the edges, and I thought your question was, very interesting because at this point, that's what you're kind of looking for to see how things are starting to maybe reflect the change if they continue, if Trump continues to double and triple down. Um, I think the interesting thing about what you're saying, though, comes down to logistics, which I know isn't the sexiest thing, but it means a lot when it comes to supply chains. When you're an American retailer, wholesaler, producer, and you import, for you to change your supply chain, for you to start buying from somebody else is actually a very big deal. It's not something that you kind of look up in the phone book and say, oh, I'll go to this restaurant instead of that one. These kinds of arrangements are very embedded. And once you change, you tend not to change back. We saw this in the Biden administration. We were concerned about unfair trade from China. And one of the things we wanted to do is keep trade robust because we think trade flows are really important for American consumers, for our supply, but to move them from China to Vietnam, Mexico, other trading partners that we were past tense more friendly with. That started to happen, and those logistical chains, once they shift, they're hard to shift back.
Turn to American farmers. We are a very small percentage of the world's population, but our farmers produce an enormous quantity of product that is sold all over the world. What happens to our farmers? And is he going to be forced to do what he did in the first term, which is throw up these tariffs and then give them money, if you will, welfare to farmers to make up for the pain that he inflicted because of the tariffs?
Yeah, I was going to remind our viewers of exactly that. So you got in front of me there, appropriately so. I don't see any reason why this would be different this time than last time, with the possible exception that the Trump administration has continually just slapped the heck out of former allies. So, I never thought I'd see them doing what they're doing to veterans. Maybe farmers become a casualty as well. So I don't know what the future holds there. These folks are unpredictable and hostile and retribution overall, and et cetera. Um, what's important in your question is the extent to which our farmers depend on exports, right? Again, in this era, it seems almost like you have to remind folks that global trade flows are actually a really good thing. Okay. I'm looking at your backdrop, you're looking at my backdrop. I'll bet you I could go through and find a lot of things coming from other countries, and that's not bad. Okay. It's not one of the benefits of globalization is we don't have to produce everything ourselves. We talked a minute ago about the integrated North American system. That doesn't mean that every trade deal is good or that trading partners can trade unfairly and can hurt our workers and our communities. We were acutely aware of that in the Biden administration, and that's why we stood up measures that we believed using carrots, not tariffs, using subsidies we believe would help stand up domestic production here. So this is not a Pollyanna rosy view that every trade deal is a good one for us. But every trade deal is not a bad one for us either. And of course, under Trump, you lose all this nuance. Our farmers would be the first to tell you that if you take away our export markets, you kill us. And so that is something I know they're worried about right now.
So as we reach the end of our time, I want to ask you about Doge and the economic effect. There's obviously a horrendous human effect, not only on the people who are laid off, but the recipients, for example, of USAID. But talk to us a little bit about what it means for the economy writ large if you have hundreds of thousands potentially of government workers being laid off and you have a pullback in terms of spending. What does that do to the economy as a whole? And is that a concern for potential recession going forward?
So there's so many concerns from Doge. To me, and I think to you, the top one is just the human infliction of pain to folks who are doing important work and are just thrown out of their jobs again uh, because they can, I guess, and because the Doge. So here's a public service announcement. The Doge folks, they don't know what they're doing. They don't know what they're doing. They're in so far over their heads. They do not understand government. And so these cuts are going to hurt on so many levels. You asked me about macroeconomics, which is the thing I think most about. And yeah, I think especially in the labor market, you could see a problem evolving from this. On the spending side, on government spending, we haven't seen much yet at all. I track the daily spending. The Treasury Department gives us a spreadsheet every day on daily spending, and it hasn't budged much. Again, take what they say they're cutting and divide it by, at least 10, if not 100. So they're just deeply incompetent. What I worry about most, Jen, though, for the economy and for people's well-being, is the inability of government to deal with the next shock that is coming, the next pandemic, the next financial crisis, and the next, this is the most important question mark, we don't know. But what the government does in all these agencies that they're completely gutting is it has preparations for economic upheavals, shocks, mishaps that the private sector doesn't. And, pandemic is the best example, and they've already been taking apart pandemic preparedness. So I think where the economy gets most whacked from Doge is by the lack of preparedness for the next economic shock, A, and B, just the suffering that's being unnecessarily caused to all the families getting laid off.
Well, Jared, thanks so much for being with us. I was one of the few voices, I think, during the Biden administration that kept saying, this is pretty good. This is good policy. So I know it is no joy to you to see much of that work now be torn down, but perhaps the public, perhaps Congress will wake up. Markets cannot be spun. Markets cannot lie. And there is a real world consequence to all of this. So thanks so much for being back. We love having you both on screen and in your writing. We'll look forward to next time.
Thanks so much, Jen.